Well, artificial intelligence has really become a key buzzword for a lot of people out there, and certainly we're seeing artificial intelligence being used in pretty much every facet of society, whether it's smart cars, smart fridges and appliances in your homes, obviously smartphones. It stands to reason that the investment management industry is also probably ripe for a little bit of disruption on the artificial intelligence side. And it's important to understand that you don't need to be a computer scientist to sort of understand that there's been a big leap forward in artificial intelligence in the last few years. Now, certainly the investment management industry has always been early adopters of using computer programming and quantitative types of investing for portfolio management. In fact, 60% of US equity assets are quantitatively managed. And if I take that on a daily basis, 90% are quantitatively managed. That means most of what we do on a day-to-day basis in the investment management world is automated. So what's AI? What makes it different? Well, really what AI is doing in a simple way is the type of AI being used now is a type of machine learning called deep neural networks. And what its template is actually that great original computer system, the human brain, where we've taken that and we've put it into a digitized type of learning apparatus where you now have computer programs or learning systems that use the learning processes of the human brain, but they're backed up by cloud computing and trillions of data points that it can conceptualize all at once. Now you could appreciate then that if you start to put this into investment management, maybe these types of artificial intelligence can find some really interesting new sources of alpha or patterns that really aren't there for the human brain to be able to conceptualize. Implications on the investment management industry could be substantial. And the reason for that is because, when we look at what's happening in the investment management industry, as I mentioned, we've already adopted many quantitative types of investing. A lot of what we do is already automated, but there is a really big point of failure in money management, and that's actually on the human side, and that comes down to emotions. So Richard Thaler won the Nobel Prize for Economics last year, and that really wasn't a surprise in his work on investor psychology, because a lot of times what limits a good investment strategy is not how much somebody knows or how well educated they are in picking the right investment solutions. It's actually in their emotional response to how they invest. People have a bad day, maybe they're having family issues, maybe they're worried about earning that bonus and start trying to go closer to the benchmark or away from the benchmark. These are all unquantitative, unqualified risks that are brought in by emotion. AI really doesn't care, right? AI doesn't have a boss. It doesn't have to worry about its year-end bonus. It doesn't have a bad day. If it breaks down, right, we know that it's broken and we can fix it, where we don't know if a portfolio manager comes in and has a bad day. And we've seen from all this academic work on behavioral economics that these are real points of failure. So really what we could be seeing is artificial intelligence being used in other facets of the investment management business to sort of create more of a rational system of investing, focusing on the good, which is quantitative statistics, looking at what works from the investment strategy, rather than the bad, which is making rash emotional decisions. We also see a lot of time savings. For example, JP Morgan initially put in some artificial intelligence in its trading systems last year, and they're estimating that about 36,000 man-hours of work can be computed using AI in a matter of seconds. So the amount of work that can also be done from the investment management industry is also substantial. So one final piece on this is AI coming to investment management? I think absolutely. Is it going to replace portfolio managers? Maybe not. What I think you're going to see is, rather than replacement, it's empowerment, where a good portfolio manager will have a cogent investment strategy and can work alongside an AI as sort of a way to keep them on an even keel as they go forward managing money. Well, as its name implies, it's an actual ETF that uses artificial intelligence and runs autonomously as a program to select investments. Now in this case, this ETF is buying individual ETFs, 32 ETFs that comprise the MSCI All Country World Index. So it's seeking to generate better risk-adjusted returns than the All Country World Index. But as I mentioned earlier, it's a thinking computer, a computer that can change its mind. So each day that it's out there managing the ETF portfolio, it's making its decisions based on new patterns that it's seeing in the marketplace. Now, of course, we haven't just let this AI loose in the market. There's been a number of years of testing with a very prominent AI firm in Korea named Craft Technologies, where they've built this system using AI algorithms that were originally used for healthcare, but they've applied it now to finance. you teach the AI how to invest. You teach it, 100 to 300 different types of investment metrics depending on the strategy, and then it takes those metrics, it applies them on a day-to-day basis, and by able to look at this entire universe of global equities through ETFs, it can see patterns that humans might not be able to, and it, on a monthly basis, can change its asset allocation to try to outperform.
Get the active advantage with Canada's leader in actively managed fixed income ETF solutions, including Canada's first actively managed preferred share ETF, HPR. Horizons ETFs, ETF solutions for every investor.